Is this QE by another name? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of the Crypto Is Macro Substack. Hi, Noelle.
Maggie, so good to see you. How are you
I'm
today?
doing well. I'm doing well. We thought we'd have a lot to talk about on Fed Day, but that certainly didn't disappoint. Oh, hang on, I left something on here. Hold on. Okay, so Fed cut rates by a quarter point. We knew that was going to happen, but they also said some stuff about the balance sheet, which really seemed to get markets going. We have stocks with a pretty powerful looking rally. Nasdaq only up 1/3%, which is interesting, but the Dow up 1%. We have crypto up. We have bond yields moving lower. Jay Powell had a lot to say. What's your take on what we heard from them?
Most of what we heard, to be honest, Maggie, was expected. There were very few surprises. I'll tell you what most surprised me was just how, I wouldn't say hawkish, but not dovish the Fed is in its projections for next year. I mean, this year is done. It's in the bag. So now we're moving on to next year. And it looks, looking at the dot plot, looking at the updated economic projections, I think they're telling us there's no more cuts coming for quite some time. And this wouldn't be surprising because the similar stories unfolding in central banks around the world. We've got the ECB over here in Europe saying that they're pretty much done, that the next move will be up. Australia, Canada, Mexico, probably also the UK after the cut that's expected this month. It really looks like the global rate easing cycle is skidding to a halt, and markets are only now starting to digest that.
So that's really interesting, and it is. We have a ton. We tend to focus on the Fed. That BOJ meeting seems like it's going to be really important. But we had Brent on Monday talking about watch New Zealand because they tend to be the pace car, and if they start hiking, that's often the sign of the beginning of a cycle. So, do you feel like the Fed was operating to sort of maybe neutralize some of the political pressure? I mean, right away, Trump is out saying they could have done double. They should have done double.
Yeah, I think so. But also, to be honest, I do think they're managing to insulate themselves fairly well. We definitely got that impression from Chair Powell's statements today. Whenever he's asked anything about the administration, he's like, nope, not going to talk about that. Nope.
Yeah.
And the other Fed officials, they don't know if they're going to be in a job in a few months because there's renewals from which the president's coming up in February. No one knows what's going to happen. So I would like to think, maybe this is the optimistic in me, I would like to think they care about their legacy and that they are voting with their conscience rather than to curry political favor. One has to believe in human rights. So I do think that we just have the most divided Fed we've had in decades, and this is because we have the most divided economy we've had in decades. We have pretty strong consumption on many levels. GDP is looking pretty healthy. Job market is weakening, and we definitely know that the lower income consumers are feeling the pinch, while the higher income consumers really don't see what the problem is. This is as uncertain as it can get, to be honest. And to further cloud the uncertainty, one thing that Chair Powell said that did surprise me was that the Fed knows, he said knows, but then backtracks to is pretty sure that the payrolls figures are routinely overstated by something like 60,000 jobs, which means we're well in negative territory now, which is a much cooler job market than in many, including myself, had been pricing in. So, but then again, pricing pressures are indeed still there. I do think that we have a divided Fed. I don't think that's necessarily going to change in February, whatever happens with the political appointments. And we're just going to have to go meeting by meeting from here on in, which does make an extended pause a lot more likely.
Yeah, it's so interesting. You're right. There's so much, and you can maybe understand why they are divided because there are these sort of mixed signals. We know different parts of the economy are doing well. They also talked about buying $40 billion worth of Treasury bills. That was the reference. Is it QE under another name? Everyone knows I'll never call anything QE, by the way, quantitative easing, never going to happen. But they do seem to be stepping back in with support. I think maybe initially that's what stocks were reacting to, although we're settling back a bit. Does this feel like they're sort of, printing and beginning that again? Or is this maybe a temporary measure to address some liquidity issues that are happening that are more technical in nature?
I'll say it's in between the two. It wasn't a surprise. Many of us thought that they would have to announce something like this, given the pressures, the building pressures in the funding markets. We're heading into year end. There's a lot of need for cash and running into year end. We're heading into tax day. A lot of need for cash in tax day. So it's to alleviate funding pressures. They still, I think, are traumatized by what happened in September 2019, not going back to that. So this is to tidy up, get a bit of cushion in there. It's not the QE that many people think of when they hear that term. In other words, this is not the bazooka. I hate that word, I really do, but it's probably what some people had been expecting, all those who are expecting the liquidity inflow to be a gush. It's not. It's probably going to be a trickle, and this is more for the health of the market than anything else, but there's no denying it is easing.
Yeah. That's an important distinction, because if it's for sort of, market functioning reasons, that's not going to be as supportive of this massive influx that would potentially drift to risk assets. So, um, you mentioned the inflationary pressures. How are you feeling about inflation? I think this is where there's a lot of division. People feel like it's a little bit sticky around 3%, but inflation's coming down. Other people point to expectations that we're going to see a reflation and reinflation of the economy, upward pressure on prices. Where do you fall in this?
I was very surprised that Chair Powell didn't really mention tariffs at all until specifically asked a question about where's the impact of the tariffs in these new economic projections, because you can't see them. You really can't see them there. And he hedged a lot. He pretty much said, yeah, don't really know when the impact is coming or how long it'll last, or it depends very much on the Supreme Court decision. Basically, he said, we don't know what impact tariffs are going to have. And when arguably that is one of the biggest economic swords hanging over us at the moment, that was, I guess, maybe partly explains why there's so much division within the FOMC as there is today. The tariffs are going to be a very big deal in terms of inflationary pressures, but that's not the only thing. This is something that we've seen build up since the pandemic, and that is deglobalization. I think you and I have probably talked about this in the past, but deglobalization is inflationary, period. There's no way around that. Now, whether we're talking a noticeable, like 5 percentage point move, or whether we're talking basis points, we don't know, because there's a lot of other things that can influence that, immigration policy, et cetera, but it's inflationary. And so inflation is going to be higher than we are used to from the pre-pandemic days. And what that does to both fiscal and monetary policy, well, that's the battle we're seeing play out right now.
Yeah. And by the way, and you've written about this, and we're gonna talk about both macro and crypto, of course, because there's nobody who looks at both of those and the intersection of that better than you. But you have been talking about this sort of change in policy and really the need to look at things through a different lens. And as we are sitting down to talk about this today, amid all the Fed headlines, we see news that the U.S. confirmed it seized an oil tanker off the coast of Venezuela. I mean, this issue with activity around Venezuela in Latin America, this was not on anybody's bingo card even a year ago, and yet now we have to deal with this. Not a huge reaction in oil, just a little bit. But is this part of the sort of new reality of this multipolar world?
Yes, and it very much ties into the security strategy document. I don't know if you had a chance to look at that. I'm sure many of your viewers did. It's the most astonishing document I've seen come out of any administration.
This is what you wrote about in your Substack.
Yeah, it's absolutely astonishing. It ties together a lot of the headlines we've seen since the inauguration, as well as a lot of the things the tariffs are part of it, obviously, but a lot of the shifts in allegiances, the initial shock that Trump could say mean things to traditional allies, or what's Vance's speech in Munich, again, was a hint that this was coming, and that China and Russia are not the adversaries, they're potential partners, whereas Europe gets very scathing treatment, fairly, in my opinion. I say that as a proud European. But it is very much part of it. The fact that there's a move on Venezuela, given recent maneuverings with battleships positioning, etc., not a surprise. The fact that it happened while Chair Powell was speaking, think that was coincidence. I mean, who knows? I was watching, especially the Bitcoin price during Powell's press conference, because Bitcoin, I see it as the canary in the coal mine for liquidity concerns. It's the leading mover whenever there's a shift in liquidity sentiment. And it was all over the place, up and down, much like yields were all over the place, up and down. Bitcoin yields didn't know what to make of both the statement as well as what they were hearing in the press conference. But then I was watching Reuters as well, and at 8 o'clock our time, the news broke on Reuters that the Venezuelan tanker had been seized and Bitcoin shot up. It hadn't done much because of the monetary statements. It shot up as soon as the news broke that the Venezuela oil tanker is come crashing back down again since then. But it's a signal that the markets are starting to look at things other than liquidity expectations, finally, because again, as you and I have often talked about, the obsession with federal funds rate and where they're going, it's irrelevant. What matters is bond yields, and bond yields are sensitive to a lot more than the level of the interbank rate.
Yeah. Yes. And they have been stubborn, which is ironic that President Trump is coming out again, trying to sort of, jawbone pressure on the Fed, because the yields are not necessarily tracking with the Fed. They're going to on the short end because of the purchases, but there's been this sort of, the 10-year's really been pinned around that 4%. I think keeping a much closer eye on the global picture that you just lay out. And Noelle did a great deep dive on that document, by the way. And of course, no, a lot of us haven't had the time to read it in depth, Noelle. That's what you do so well. And when I read your Substack on that, it really made me stand up and take notice. So talk a little bit about the crash back down in Bitcoin, because I think this should be a great example and should be supportive. And yet we keep seeing that sort of downside seem like it has a lot more gravity. Is it disappointing that it went back down? Expected?
My view on Bitcoin through to the end of the year, I've said this in public before, is not much different from where it is now. I'm not expecting a Santa rally. I'm not expecting a ramp into the new year. In fact, we could get some pressure as investors harvest losses or do some portfolio rebalancing or decide to just wait until New Year so that they don't have to have the conversation with their clients about why they have this underperforming asset on their fund list. Let's face it, Bitcoin has not had a fantastic year, and so maybe that's just a conversation best avoided. However, longer term thesis for Bitcoin is stronger than ever because, if for no other reason, part of what we read and part of what we saw in that strategy document, it's about realignments of alliances, which also will affect the purchases of treasuries, and it will affect the demand for US assets more broadly. And that is going to feed through to yields, which is going to feed through to inflation and so on. There's just, again, a lot more going on than the obsession around the monetary policy liquidity drivers, which Bitcoin could have been crashing because it now realizes that there's no rate cuts coming, or it could be crashing because it realized it overreacted on the potential oil supply disruption, or who knows. There's just a lot of volatility in Bitcoin today, but it's a reminder of why that security strategy document is so important for markets going forward. And I speak to so many traders that are just focused on US liquidity expectations, which for US tech stocks, maybe. But when it comes to crypto, so many forget that it is a global asset. And an investment thesis in Japan today is not necessarily the same investment thesis as it is in Athens or Burkina Faso or any of the other markets in which you can hold this. So it's a reminder that Bitcoin is not a simple liquidity canary in the coal mine, although that is definitely a big driver. There are other factors, especially in the geopolitical arena, that can move it as well.
Yeah, no, absolutely. We had a question, hey, to everybody on Substack Live, which we are on there, Noelle. I was not sure. Sorry if you didn't get a prior notification. We're dealing with some of those glitches. And on YouTube. Great to see everyone. So we have a question about your take on silver, but for me, it's connected to what you just said, which is that, there is this concern, about the geopolitics, about this sort of changing world order. And I felt like in the beginning of the Trump administration, the narrative was really this is beneficial for crypto, borderless, but it seemed like through the year that really favored precious metals more, and people felt more comfortable moving in that direction when we started to see the volatility in crypto. So is that the case, and do you see precious metals still kind of outperforming that way? Has crypto lost a little bit of its luster as that alternative or that protection against the changing geopolitical tides?
I would say they're on slightly separate paths right now. Bitcoin does still have a role as digital gold, and I've often heard ETH referred to as digital silver. I personally don't see it. I see ETH more as digital oil, for instance. But let's put silver in the gold bucket. I mean, there are many different supply and demand dynamics for both, but I hear them talked about in the same parentheses. So precious metals, Bitcoin in one bucket, ETH and oil in another, and it comes down to demand and supply and demand. As always, gold is an interesting story, has been a fascinating story for the whole of 2025, and I do think we're overlooking just what it is telling us. It's not just, holy cow, look at that performance. It's, wait a second, why and why now? That's the very important question we're overlooking. Silver, same thing. Why now? It's not just about harvesting profits. There are central banks, there are large institutions that are accumulating gold that want it repatriated to their own jurisdictions for extra security. That's not just about making money on trades there. That's not commodity trading. That's investing for the security of tomorrow. That's diversifying from dollars. And Bitcoin has not got, one, gold's legacy, and two, the familiarity that central banks would need to be able to accumulate more. However, that will change with time. And again, especially as central banks and large investors start to realize the relative underperformance of Bitcoin, the potential catch up. And this is even before, again, bringing it back to the geopolitical realm, this is even before you start to realize the potential role for Bitcoin in global trade. We know that today, Russian entities and Chinese entities and some other entities in the region are using Bitcoin as well as stable coins to settle international trade because they don't have easy access to the dollar system. We know this is already happening, and there will be services coming out over the coming months to facilitate that even further by also tokenizing trade invoices, etc., etc. This is stuff that we used to talk about back in 2017. We're seeing it actually happen now, and the difference now is there, for many nations, it is necessary, not a nice to have, it's a must have. Again, you factor all of this into the supply demand equations, and you can see demand increasing for Bitcoin over the coming months for portfolio diversification purpose, but also for practical use purposes. And yet you know that the supply is going to stay the same. Now, gold doesn't have that flexibility just yet. You're not going to necessarily pay for your trade invoices in gold, although I'm hearing there's some things going on around that as well. And it hasn't got the catch-up potential that Bitcoin has. And a reminder, we don't know how much gold there is. We keep hearing every week, it seems, about a new mother lode discovered somewhere. Surely this has to factor into the supply equation at some stage. And a reminder that the higher the price of gold goes, the more economical it is to extract from the ground. So the higher the supply. That does not happen with Bitcoin.
Yeah. It's such an interesting time, because I feel like you just laid out what is still a use case and what supportive measures for Bitcoin. What do you make of the? Am I just hearing? Maybe it's the circles. We always have to wonder: are we just hearing things, like we're all listening to different things, and you operate you have much more exposure and you're having much deeper conversations in the blockchain world. But I feel like the conversation about the sort of legitimacy and long-term demand and use and diversification, all of that for crypto was really strong in the beginning of the year. And there was this powerful, positive sense with the change in Washington. And just lately, in the last sort of half of the year, but really in the fall, I've had so many people that I've been interviewing and talking to really very comfortable saying, yeah, no, this is, we've seen Bitcoin go down and it's just reinforced that it's not as no utility. This is only as value because sort of like the gambling side of it, the kind of meme gambling side of it. And I really hadn't heard that. It seemed like it had moved into a different chapter. Have we slid back a little bit now?
We call it the ick factor. And let's face it, crypto does have quite a thick ick factor, I would say, especially these days. And we can be extremely grateful that the administration has removed many of the barriers for crypto developers, for crypto investors, for institutions to march into the sector. Very grateful for that, and has made a big difference to the future, financial future of the United States markets, in my opinion. But there is, let's face it, an ick factor. And this even started before the inauguration with the launch of Trump coin, et cetera, et cetera. Now, you probably see where I'm going with this. After that, many of the people that I speak to that were interested, TradFi types, that were interested in crypto said, no, this is just kind of still too ick for me. And it may take time for that ick factor to wear off. And I can give you some, I don't have the numbers in front of me, but you can see this in the charts. Bitcoin did really well in the ramp up to the inauguration, even though Bitcoin was not going to be a main beneficiary. I mean, even Gary Gensler, when he was chair, agreed that Bitcoin is not a security, and the ETFs had already listed. And so Bitcoin was accepted. That was done. The big beneficiaries were going to be ETH and all of the DeFi tokens. The DeFi was finally going to get some of its regulatory clarity that it had not had. It was going to be able to come in from the shadows, but you look at the DeFi token indices, they've done nothing all year. So it's reasonable, in my opinion, as a crypto enthusiast and supporter, it is reasonable to take a look at the crypto ecosystem and feel disappointed. Even many people that I know who've been working in this industry for a very long time are thinking of leaving because kind of the ick factor, the money go up, this is not what I joined for. I will also say the digital asset treasuries did not do the market any favors. Yes, there was a lot of buying from that enthusiasm, but again, a big ick factor in that, what are we betting on? We're betting on financial leverage. This has nothing to do with crypto at all. It's financial leverage, and that rarely ends well. Now that seems to be being flushed out. We had the listing of 21, which is a big digital asset, very high profile digital asset. Treasury was listed this week, and the share price dropped. Again, in this kind of market, that's rare, right? I took that as a very big signal that the digital asset narrative is now finally, thank God, fading. And this is going to be one of the factors keeping Bitcoin muted, and other crypto assets as well, as the digital asset treasuries that don't make it, their share prices don't recover. They're going to have to start selling tokens to be able to buy some shares back to keep the holders happy. But that, again, will eventually fade out, and then we can get back to the real geopolitical narratives and the liquidity narratives and the things that actually matter for crypto. The reminder
and innovation around payments that I hear about and that I'm so interested in when I hear that. I think that was a great explanation, because I go back and forth, and when you're hearing sort of, the positives and people who are pointing to things like the innovation, and then you hear the other side, it feels like, where are we in all of this? So thank you for that. Luke asking, has the cycle in Bitcoin, the half cycle in Bitcoin, is it still valid for the next few years?
No. Simple answer. No, nowhere near. Again, that used to be a 4-year cycle that you could set your clock by, pretty much, because every 4 years Bitcoin had a halving, which materially impacted the supply of new tokens that was entering the market every single day, and therefore the sell pressure, et cetera, et cetera. But that actually started changing, I would say, even in the last cycle. The biggest impact on that really was China banning Bitcoin mining, because this was back in 21, I believe, because the Bitcoin miners had to leave, and many of them came to the United States, where they got financing. They could actually get financing, so they didn't have to sell their Bitcoins in the first place. That was the first disruptor to the cycle. And then the big disruptor more recently has been the institutions. Institutions have distorted the crypto native belief in the cycle, as well as the understanding that the sell pressure has changed. They don't care about that. They're looking at the longer term theses. And as for the new amounts of Bitcoins that is coming into the market, each halving, it dwindles in percentage terms relative to the amount outstanding. Right now, Bitcoin's inflation schedule is lower than that of gold. I think it's at around 1% or something like that now, and it will continue to have every halving cycle. So no, the 4-year cycle is not a factor anymore. For many old-time Bitcoin investors, the psychological reflex is still there. So I do think this year we have seen some selling, thinking that the peak is in and it'll be downhill from here. But most of the investors today are not really going to be buying into that habit, that rhythmical reflex, because it fundamentally doesn't make sense anymore.
One of the things that you do so well is that you pay attention to what's happening in different countries and what they're doing, and that global view on crypto, which, frankly, I just don't get enough across my screen. Or I'm too busy to really sort of go into the weeds, and you sort of break it down. And one of the things that you mentioned, which I'm surprised I hadn't seen, was some changes going on at the Commodities Futures Trading Commission. I mean, we were so on top of regulation and what was going to get improved. And it feels like, understandably, because we are bombarded with headlines from DC, that we've sort of shifted away from this. Are there changes that are positive coming from there?
Hugely, and I must say, huge hats off to Commissioner Caroline Pham, who's been the acting chair since, I forget exactly since when, but I know that since September, she's been the only sitting commissioner, because all of the others have resigned. And she said back in May that she wanted to leave as well, but had to stick around until a new chair comes in. That hasn't happened yet. So she has bravely been handling a lot on her own and getting a lot done. And we've seen a flurry of announcements over the past couple of weeks that show that she really has been, working, she and her team, working very hard in the background to get done what they promised to get done at the beginning of the year. And that includes boosting the utility of crypto assets. And this comes down to what you've mentioned often before. Yes, the utility. And while people tend to think of utility as, I'm going to use it to make a payment, but they tend to forget that utility is different things to different people. If you're holding it as a portfolio diversification, that's utility. And this is where the CFD comes in. If you're using Bitcoin as collateral for a derivatives trade, that's also utility, arguably, right? And what the CFTC has said is that traders can now use Bitcoin, ETH, and USDC, stablecoin, as collateral in trades. That was allowed up until now, but only for like asset positions. You could use Bitcoin as collateral for a Bitcoin derivatives position, but now they're opening it up. You can use this as collateral, period, on all of your on-chain trades. And obviously there are different haircuts for security reasons. That's standard. Everyone knows how everyone would expect that. But the other thing that I think is absolutely fascinating is combining spot Bitcoin trading and ETH and others on the same platform as the derivatives. Now, this has happened occasionally. You can get spot-like contracts on derivative platforms, spot gold, for instance, but rarely with physical delivery. Spot trading on CFTC-approved platforms could have physical delivery. This is a different type of market, but what's most important is how it opens up not just greater market liquidity, but greater utility for the assets, because most US institutions have accounts at the CME, for instance, and were the CME to list spot Bitcoin on the same platform, they would be able to take a position and hedge, or they would be able to play the basis trade, in which you buy the spot and you sell short the futures and you harvest the difference. Right now, they've been doing that on either separate exchanges or unregulated platforms, but now that can be done on a regulated platform. And finally, it is a massive step forward for crypto market structure more broadly, because another thing many don't understand is that there is no federally regulated crypto spot exchange in the United States. Coinbase, for instance, is licensed. It's not federally regulated yet. Whereas CME is, and if CME starts trading spot, then that makes it the first federally regulated spot crypto exchange in the United States. And while that's more semantics, the institutions that use Coinbase don't really care because they know Coinbase is trustworthy. It's a big difference for Coinbase because no longer will they have to go through all of the state-by-state money transmitter licenses. They can now just self-certify the assets they want to list, and they can do so, bring them closer to their derivatives platform.
Wow. So it sounds like removing a huge amount of friction.
Removing a huge amount of friction, boosting the utility of crypto assets, while at the same time offering new types of products and services to the institutional investors, not just crypto investors, we're talking to investors, period, which I think is the progress in not just crypto market structure, but the progress in market structure, full stop, that I got excited about when I got into this industry back in 2014. Markets are inefficient. The siloed nature of different types of assets operating under different regulators, operating on different venues and settling in different manners, it's not efficient. It evolved piecemeal as markets grew and grew and grew, and unwinding it is going to be a mammoth task. So maybe it's just simpler to write a new set of rules for a new set of assets and then have traditional assets somehow fall in behind those. That's why I got excited about crypto when I first started researching it back in 2014. And to see it start to happen, again, hats off to Caroline Pham and her team for actually pushing this through the door in the end of 2025. It's kind of a pinch me moment. I didn't think we'd see it so soon.
Yeah, and hats off to you for tracking all this so closely, because it is removing that friction. Now, when I'm listening to you say this, that almost across the board, when I'm talking to people who are really building in that industry, really working on projects, really passionate about the projects, and Jeff Dorman and Chris Perkins are two that come to mind. This is what they focus on. They worked in TradFi, they saw what wasn't working, and then they saw an opportunity to make things smoother, reduce friction, have a better experience all around. And I think that's what keeps them going. So it's so interesting to hear you talk about it in that way, and great for you to bring us up to date. For those of us who are frankly having a hard time keeping up with everybody. Nan says, refreshing to hear utility being used as a term in the space. That doesn't mean a free t-shirt and the like. Thank you, Nan. Great response. We'll circle back to macro for the last comment. And I mean, Noelle's written so much on stable coins, like that would take a whole nother show, but I'm just telling you, she's been doing such great work on that. So if you have any questions, which we all should be tracking, that's where you should go. RF asking on Substack, what do you think about 10-year treasuries? He or she asked for a trade. We don't give trading advice. So I'll just say, what do you think about the direction of treasury yields? Because this seems like it's the really important point. We keep talking about stocks as they go into year end, but what happens with the yield seems like it's really going to be critical.
Now, right now they're heading up, which is very unusual. I was squinting at the charts yesterday, and we have the yield curve steepening into a cutting cycle as the rates are coming down. Yield curve steepening, that's normal. We usually get that, but this is the first time I've seen it happen. You have the 10-year going up rather than just coming down by less than the 3-month or the 2-year or whatever. We actually have the 10-year yield going up while the federal funds rate is coming down. That's not supposed to happen. So there's something else going on here. Growth expectations, fears of inflation. I think a lot of it, actually more than inflation, is to do with geopolitical concerns, to do with concerns about who's going to be buying the treasuries going forward. You've got to have a risk premium in there as well for the turmoil that could lie ahead should more tankers be seized. There's that. But rather than say, I think yields are going to continue going up, I fully expect us to see yield curve control come in next year. And this is a big statement because that's just not been done in the United States of America before, but I don't really see any other choice. I mean, we all heard President Trump threaten to fire Secretary Treasury Bessent if he didn't get yields down, because let's face it, the federal funds are much less relevant for the economy than our Treasury yields. Got to get those yields down if you want to get mortgage rates down, if you want to get loan rates down, et cetera, et cetera. So they've got to come down. And in the absence of a surge of new demand for treasuries, stablecoins possibly, but I think that's hopeful to expect that so soon. In the absence of a surge in demand for new treasuries, then where's the demand going to come from that is going to bring the yields down? And it could come from the central bank, for instance, which would explain why the administration is so hell-bent on eroding the independence. It could come from commercial banks. It's really worth keeping an eye on what Governor Bowman is working on. She's rewiring bank regulation, walking back many of the rules, lowering some of the reserve ratios. And we haven't yet seen this, but I wouldn't be surprised to see something along the lines of, oh, by the way, we do in exchange expect you to buy long-term treasuries. We could see this in fiscal measures as well, special tax treatment for longer term bonds rather than short term bonds. In other words, we're going to see some kind of stimulus for the long term, for the long end, not necessarily from the Treasury because they're going to keep on issuing in the short end because they need to manage their maturities, but they need to get the long term yields down somehow. And this is part of the stablecoin strategy. But again, I do think everyone's going to realize that might take a bit longer than they thought. So there's going to be some other measures coming through. Yields will come down one way or another.
Yeah, but watch out why and in the manner in which they come down. It's going to be hugely important. And Noelle just dropped some like really important stuff for us to watch for as we head into next year, and something that we'll be sure to bring up in future conversations. Noelle, such a pleasure, as always.
Always so much fun talking to you, Maggie. I can't believe the time flies by so fast.
I know, because we're trying to squeeze in all of your epic, crazy knowledge about both of these markets into such a short period of time. But I like to think of it as sort of laying some breadcrumbs for people to follow back to your Substack, and they can really go in and go into detail because you do lay it out and give us an awful lot to think about in there. So appreciate it. And it is your birthday Friday, right?
Is. I am actually, for the first time, taking the day off. I've never done that before. But you know, Maggie, you hit a certain age and you realize, darn, I'm actually really glad to still be here. So I'm going to celebrate it.
Absolutely. Fantastic. And you should. You deserve the break. But a happy early birthday to you.
Thank you so much, and happy holidays to you and all of your viewers. Early, I know, but since it's such a festive season, you can never hear that too often, right?
I can't believe it's true. It's pretty much everyone we're going to be catching up with. This is sort of signing off for the end of the year, for the last time this year, which is so crazy. I'm in denial that we are there.
It's been a crazy year. I mean, seriously.
It has been. I can't wait to see those retrospectives, like the year, because I don't even think we can remember everything that's happened this year. It's just been such an extraordinary year of change. Would you explain?
Mercifully, we have your show to look back on if we need a refresher.
That's right. If only I could. I'm going to have to find an AI tool to sort of grab the best of, because I'm only one person right now. But yeah, no, it's been fantastic, and we'll keep going. But enjoy, and all good wishes for you in the holiday season. So thank you so much.
Thank you so much, Maggie. Bye,
Thanks, everybody. We will be back with Dale on Friday. And he's going to be watching yields and oil. Two things that he said were poised to look really interesting. So we'll catch up with all of that and his thoughts on Bitcoin and everything as well. So please join us then live. In the meantime, everybody, take care and good luck out there.